If you're self-employed or a small business owner and you had some major sticker shock over how much you owed in taxes this year, well, stick around because we are going to be talking all about my favorite tips to reducing your taxes so that next year is better. And I promise some of these you've probably never even heard of. So jumping into the best ways to save on taxes for next year, the first thing that we want to do is to maximize our deductions, okay? That's really, really important to make sure that you are getting credit for all of the money that you spent on things related to your business, okay? Now that does not mean, as I always say, to go out and spend more money that actually isn't going to generate any kind of return for your business so that you get the deduction. That's really not a great strategy because you're lowering your profit overall. But if you already have paid for things, making sure that those are considered in your deductions is key. And for a lot of entrepreneurs and business owners, that means making sure that you are getting credit for things that are perhaps things you're even paying personally, like your phone bill or your internet bill if you work from home, and ensuring that a portion of those is attributed to your business and is deducted. So as a business owner, as somebody who's self-employed, you have the benefit of being able to actually write off a portion of those things. And you do have to figure out what is a reasonable allocation between business and personal. How much can I write off of this? I have other content that dives into those calculations, but overall, you don't want to miss out on those things because honestly, that's just money back in your pocket. It can help reduce your tax bill. Now, importantly, a deduction is something that reduces your taxable income, okay? So it is essentially your sales minus your expenses equals the amount that you are taxed on. So deductions are great. But the second thing I'm going to talk about here today is even better. What you want to do is make sure you're not missing out on any tax credits, okay? Tax credits are better than tax deductions. A lot of times we get them confused. We think they're ultimately the same. We conflate the two. They are not created equal. Tax credits mean you're actually reducing your taxes dollar for dollar. For example, a tax deduction of $100 is just going to reduce your taxable income. Then you're going to apply your effective tax rate. Let's say it's 25%. That'll save you $25 in taxes. But if you get a tax credit of $100, that takes a full $100 off the taxes that you owe. Tax credits are fabulous, and there are so many available that we don't even realize when we're running our business. And I recently ran into this when I opened up a 401k recently for my team, and I plan to do a video more about this later for any small business owners that want to offer something like that to their teams. But I realized that there's a treasure trove of tax credits available to me now that I am setting up this 401k. So there are some new ones where some of the money that I might match as an employer can be a tax credit. That will allow me to be able to offer them better matching and things like that because a portion of that I'm going to get back as a tax credit from the government. And even one thing that came up when I was looking at this 401k that I had no idea is that military spouses, by employing a military spouse, as long as I followed certain guidelines, there's extra credits I can get for having a 401k that's open for military spouses. I happen to have a military spouse on my team as my COO, and so that was shocking. I had no idea. So there's so much out there, and it is changing all the time. And the real purpose of tax credits, right, is to incentivize certain things that the government wants to incentivize for various reasons. There are tax credits for research and development. Again, the rules can get a little bit tricky, so you definitely want to make sure to work with an accountant on these or to ask questions. This is not really a DIY thing you're going to want to do, but it is important to know they exist so that you can ask questions about them. And similar to the 401k credits I was just talking about, there are also health insurance credits that exist out there if you want to get health insurance. Again, there are lots of things to know about this. Not everything will qualify. You want to make sure that you're setting up your plan and aware of those rules. So you want to be talking through that with a CPA and with the plan providers, but there are certain things that can allow you to get additional tax credits that you might not even realize exist. Other things would be like energy efficiency. If you're upgrading energy efficiency for your office or something like that, that could potentially qualify as well. So again, tax credits are really given to people in order to be able to incentivize certain behaviors that allow you to save on taxes. But if you don't know about them and you're using something like a TurboTax or another software to file your own taxes, it may not even ask you questions about this because these are often seen as things that are less common. And so they may not even put it in front of you and ask you. And again, you want to know about it up front so that you can decide and set it up the right way. I had to make certain decisions on the 401k in order to maximize those tax credits that I would be eligible for. And I had to do that on the front end. So again, anytime you're thinking about doing something, take a look, see if there could be a tax credit available to you, and be mindful of that when you are setting it up. I adore tax credits. To me, they are so much better than deductions, and that's really a place that a lot of people are missing a lot of tax savings when they aren't paying attention to what potential tax credits they could be eligible for. Now, another tax saving strategy, tax tip to reduce your business taxes is going to be making sure you are the best entity type for taxes, okay? So you want to make sure that you have evaluated what entity type you are and that it is the most tax advantaged one for your specific scenario. I have so much content on this. I have an entire playlist all about deciding if you should be an S corporation or an LLC, what the differences are, how they can save you money. They don't save everyone money, but they can save the right businesses quite a bit in payroll taxes. Again, though, you do have to make sure you do it right. So this is not something that you want to DIY if you don't have a background in this. But again, you want to be aware that it exists so you can ask the right questions of your service providers and make sure that you are not missing out on anything that could save you lots of money. Now, the next tax tip that I talk about all the time is hiring your kids, hiring your family members, right? This can allow you to shift your income from your tax rate, which is probably higher, to your child's tax rate, which is probably a lot lower or even zero. Other people might do the same thing by hiring parents or other people like that, which can also effectively help to shift income, especially if you are in a higher tax bracket. That is a great thing to be able to do. Also, if you're doing this for your children, it allows you to set up a Roth IRA for them and be the custodian for that, and to be able to already be putting money into their Roth IRA because now they're making earned income and so they qualify, and then they can have the magical power that is compound interest taking over. And my kids are 7 and 10. They both have Roth IRAs now. The money I'm putting in isn't a ton, right? It's a few $1,000s a year for the odds and ends things they do in my business. But over time, even if I just contribute until they're 18, a few $1,000s until they're 18, they'll have over $1 million in that when they retire, even if they never put another dime in. I see a lot of power in that, and it can, in the current year, also help you by shifting that income to a lower tax bracket. Now, you can also do this and hire your kids and shift that income, and you can actually use what you're paying them to pay for things you're already paying for, right? Their sports fees, their camps, whatever they have going on, right? You can actually use their money to pay for it instead of yours, and they will have gotten it at a lower tax rate. All right. Now, there are a lot of things, again, as with every one of these tips, do not DIY this. Do not take this advice and run with it yourself. Make sure you have the right resources to be able to do this properly. People who do this the wrong way can get themselves into trouble, deal with, back taxes on IRS audits and things like that. And I don't want that for anybody. So just make sure to be doing your due diligence. I do have certain products and toolkits that can help with things like this, specifically around becoming an S Corp or hiring your kids, to make sure you have all the right contracts in place and to make sure that you're doing it the right way. So I definitely recommend that. And as always, I think it's a good idea to consult with a CPA. I am a CPA, but I'm not your CPA, and therefore I want to make sure that you are getting good advice for your specific situation. None of these things that I'm talking about here today are one size fits all. They will work for some and not for others, but again, it's all about making sure you do it properly. And the last thing that I want to talk about is contributing to your retirement plans. Okay, so if you have a SEP or a 401k or something like that, if you are contributing to those plans, then you can reduce your taxes today, assuming that they're not Roth plans, right? They will be deductible today, although they will have to have taxes taken out when you actually take the money out at some point, probably when you retire, right? So you're basically just shifting that tax burden to later, and they can reduce your taxes now. So there are a lot of different options out there. There are SEP IRAs for business owners, solo 401ks. Again, if you have a team, maybe you go and actually have a regular 401k. That is what I have put in. There are Roth 401ks, and Roths work a little bit differently. So you don't get the tax savings today, but you will get it later. And that for some people can be really beneficial, especially when you're younger, which is why I love Roth IRAs for kids. If you're contributing to a retirement plan for a child and their tax rate is probably zero, okay, their income tax rate, then that means they're not paying taxes now, and it's a Roth, which means they don't pay taxes later when it grows. So it's tax-free always, which is amazing. Okay, so don't miss out on that. And then don't forget about your own retirement plans as well, because that's a great way to save money on taxes. Now, I have a lot more that I could say about all of these things, but I really want you to be proactive this year, because oftentimes by the time you get to the end of the year, right, there's very little that can be done about your tax situation. So it's better to look forward and make these changes early. In some cases, the earlier you make them, the better, and therefore you're going to have better line of sight. You're going to be able to already start reducing taxes for next year today. So if you're interested in diving deeper into any of these strategies that we've talked about here today, definitely grab my free guide to tax savings for business owners at jamietrull.com/tax savings. And it will recap some of the things we talked about here and go a little bit deeper and recommend some resources for you if you think that making that change could be the next right move for you and your business to save on some taxes. So thanks for joining me. Make sure to tell me in the comments below, especially if any of the tax credits, anything we talked about here today, you want me to expand on in its own separate video. I'm doing some content planning, so please make sure to write down below what you're interested in finding out more about, and I will absolutely put that on the list for next time. Thanks so much.